All righty, let's get started today, folks. How's everybody doing? Let me know if you guys can hear me. We're just getting started, and wanted to talk about a few things today, including, let me see, am I able to share my screen here? And let's talk about World Petroleum Council. All right, guys. All right. Anyway, so we are getting started. I am open for questions. Let me know what you guys want to talk about today. So I've been paying a little bit of attention to the World Petroleum Council that's going on right now, the big meeting in Houston. And it's been interesting to say the least. And so this is what I'm talking about is, hold on a second here. A bit, been talking about this right here. I don't know if you guys can see this or not. Let me know if you guys can see this actually. Okay, excellent. So this is one of the things I've been following for a while. This is a World Petroleum Council. This is something that I follow every year. I used to work in the petroleum industry a long time ago, and so I pay attention to this. So as you know from some of the videos that I've done in the past, that I've been sort of slowly divesting myself of my individual holdings in oil and gas for quite some time. And even though oil and gas has seen a pretty big run up in the last couple of months, with prices being up and all that, I have not increased my holdings in oil and gas. I'm not going to increase my holdings in oil and gas. In fact, I think that we actually reached a sort of peak business-wise for them some time ago. But if you look here, where it says, or I'm highlighting the 23rd Congress right here. Houston is the energy capital of the world, and they're hosting the 23rd annual the 23rd World Petroleum Congress. It's the first time that this has been held in the United States for quite some time. And, first time this has been held in the United States for quite some time. And what's important about this is one of the things they're saying now is that Houston is not the energy capital of the world. It's the energy transition capital of the world at this point, which I think is really kind of odd. So it's an indication in a lot of ways that the oil industry has finally capitulated here. They admit finally that it's over, the party's over, and that the transition from transition to electric vehicles is fully on the way, and that nothing is going to stop this at this point. And these petroleum companies, which for years have been trying to brand themselves as energy companies, when they don't actually provide energy, they simply provide oil for the most part. For years, they've been trying to brand themselves as such. Now they're saying they're finally going to actually make this transition. They're going to make this transition from being oil companies to providing energy, right, to actually being energy companies. I don't buy this for an instant, but it is sort of interesting to see that all of the speeches and all of the presentations have sort of acknowledged this giant capitulation at this point, that the electric vehicle revolution is in full swing right now. It's unstoppable. And there are still plenty of folks out there that are opposed to this. You know some of those. I know some of those. If you look on Facebook, every once in a while you see these sort of anti-electric vehicle memes that are posted that are wildly scientifically inaccurate. But one of the recurring themes in this World Petroleum Congress that I keep seeing over and over and over is the idea that solar can't replace petroleum in terms of energy production. Well, folks, that assumption or that statement is just wildly inaccurate. And I think if you feel that way, if you feel that solar is never going to be able to replace, all of our electricity generation needs, it's probably because you've been brainwashed into thinking so, right? And let me explain why. Tesla's Elon Musk has constantly made speeches over the years talking about how it would only take about 100 square miles with solar panels to replace all of the energy needs of the United States. And he doesn't really clarify that statement. Does he mean all the electricity needs of the United States? Does he mean all of the electricity needs plus all the transportation needs of the United States? So I decided I was going to go through and sort of think about what that means, like how much energy we actually use in transportation. As it turns out, that number is a little bit easier to calculate than I first imagined. So I'm going to go ahead and kind of do these calculations on an off-screen calculator right now while we're talking about it. But based on the National Transportation Statistics Board, or it's an element of government. I went on their website and I looked it up. And the last time we have really good numbers for everyone driving and everyone on the road is 2019. And basically, people drove about 3.2 trillion miles that year. All right, so it's 3.2 trillion miles of driving that was done. So if all of those miles were being driven by electric vehicles, and I'm just going to choose one electric vehicle out there. Let's say it's the Tesla Model 3, which is the cheapest electric vehicle out there. Now, some vehicles right now are less efficient, but in the future, many of these vehicles are going to be more efficient. But let's say they just get an average of, they burn an average of 0.24 kilowatt hours per mile, right? So what you're looking at that point is 768 billion that's trillion kilowatt hours in this case. And that's a lot, right? Sounds like a lot until you realize that the calculations for how much we need to generate gigawatt hours per mile and petawatt hours per mile and terawatt hours per mile. Essentially, it's this. That's 768 billion kilowatt hours, which is 768 terawatt hours, essentially, right? So we're taking that, and we know that it takes about 5.3 miles of solar panels. This is based on 2013 numbers, where solar panels are only 14 to 16% efficient. We are looking at about 5.3 miles to generate a terawatt of energy per year, right? So it sounds like a lot, right? So you're looking at 768 billion kilowatt hours here. That's 768 terawatt hours per year times 5.3 miles or so of solar panels that we need in this case. So that's 4,070 miles of square miles of solar panels that we need just to power transportation in the United States alone. That sounds like a lot, right? 4,070 square miles. But let's talk about this. How big of a square is this really? So we take the square root of 4,070, and we find out that that's a square, 63.79 miles by 63.79 miles. That is really that is essentially what that's all the electricity that all of the transportation in the United States would be using if it was all being done on an electric basis, and it was essentially all done by like a Tesla Model 3. Now, I realize that some of it's going to be more efficient, some of it's going to be less efficient, but in the future, it's all going to be more efficient. So based on the number that Tesla throws out is 100 square miles by 100 square miles is all you need for all of the electricity needs in the United States. That number includes electricity generation for your home as well as our transportation needs. Only 63, by 60 a square of 63 by 63 square miles would power 100% of our current transportation use at this point. Now, we have challenges, of course, with storage. We have challenges, of course, with grid management, but those are engineering level problems. We're beyond the theoretical impossibilities here. This is all possible in a real sense, and only going to be made absolutely possible by the future. And Tough W70 says, are any questions answered here? Yes, I'm just on a rant right now, so I'll answer plenty of questions as we go through. I want to remind you guys, this is your first time watching, that we do have the super fat chat features available. And anyway, that was just my quick rant on the energy industry there, on solar panels and all that. As I'm watching the presentations from this World Petroleum Council right now and reading the articles surrounding them, reading what other industry professionals say, it looks like, I mean, this is just real general fear of solar, and people are really talking down on solar all the time. I'm telling you, the impetus behind that is that the oligarchy realizes that solar does one thing: it decentralizes control of energy production, and that is something that they're very, very afraid of. So yeah, let's start looking at comments here. And Max McGinley says, can you name a crypto / stock that you think will do really well in 2022 and the future? Well, hold on. So if we're looking at let's talk about crypto first of all. Number one, I mean, the obvious answer of course is Bitcoin here. But the maybe not so obvious answer is which do I think are not going to do well. And Cardano is one of the ones that I think is not going to do well in 2022. I think that unless they get more people developing on their network, that it's going to sort of fall out of fashion. Solana is probably the most obvious answer as to which coins are going to do really well, or which blockchains are going to see more development, more applications written for them, and which is going to see more interest in that network going forward. The other one is Algorand. It's another one that I'm a big fan of. It hasn't seemed to have caught on so much, but their development environment is growing again. It had dropped off for a little bit. It's actually growing again at this point. But a stock that I think is going to do well in 2022 in the future. I said this on the last live stream. NVIDIA is probably the one stock that is set to take advantage of every single trend that we have out there right now. And I think that it's, we're talking medical, we're talking metaverse, we're talking electric vehicles, self-driving, AI, cloud computing, edge computing, gaming, everything. NVIDIA has their hands in all of that. And they have their hands in things that you and I don't even know about at this point. We haven't started to cover it yet. So, so I think that NVIDIA is one of those choices that's out there. I'm a big proponent of a couple of other stocks too. I don't recommend that anyone go out and buy a particular stock on this channel. Of course, that's not something you can really do over a YouTube channel. That's not taking into account what your time horizon is, that sort of thing. So, hey, Martin Cusno says, hey, Jason, question for you. How do you purchase land on the Metaverse? So, well, it depends on which metaverse that you're purchasing land on. From what I understand, Decentraland has a process for doing that, and the Sandbox has a process for doing it. I don't know anything about Sandbox's process, and I just started exploring Decentraland at this point, and I have not investigated buying land myself on that, but I have been thinking about what digital real estate is actually worth as I'm kind of cruising around there. And at this point, I haven't actually engaged in Decentraland with my my Oculus headset yet. I've got that on order, but I am taking a look at real estate in the sense that it's not going to. So digital real estate has had value for quite some time. It used to be that you could buy advertisements on the front page of Amazon. It was super expensive, but it was a guaranteed way to boost sales, right? And that is. And so digital real estate, and it used to be that is the way you purchased advertisement, is you simply went out and you purchased things directly on the front page. And then advertising companies like DoubleClick and Google and a couple of other companies out there, they changed the way that banner ads were being served to people. And then Google really changed the way that the text ads were being and search results were being served to people. And that kind of changed the digital real estate in a way that we don't necessarily think about digital real estate. I think that digital real estate in terms of Decentraland, based on like where you enter into the game and that sort of thing, or where you enter into that world, that's going to look a little bit more like traditional land-based or reality-based real estate look like in the future, right? The value of your real estate is still going to be attached to some sort of commercial purpose inside of the metaverse. So what are you selling inside of the metaverse? When I'm looking at like Nike Land or something like that, or these other things that are being developed in these metaverses, I think it's extremely interesting to see how this is developing at this point. So I don't think it's necessarily going to be the key. It's not going to be exactly like, well, I see this suburb in the metaverse developing. I'm going to buy a street corner there so I can put like a Circle K or a 7-Eleven on it. I don't think it's going to be quite that way. but it's not going to be that different from it either. And I think we need to really start thinking about the different ways in which we can exploit the sort of physical space inside of the metaverse. And I think there's not a good way to understand how that's going to happen. And I think there's going to be a few geniuses that figure it out first, and these are the people that are going to be far, far ahead. So Tommy Flanagan says, do you think we're going to have a red or a green day tomorrow? So I don't think that my prediction is really very useful in this respect, because predictions in general aren't that useful. But I actually think that a lot of the volatility you saw in the market in the last couple of weeks is probably been sucked out of the market for a little while right now. Now we're going to see more of a traditional Santa Claus type rally where we see an increasing market through Christmas or so, and that's because more and more of the institutional professional traders are going home on vacation, or they're kind of checked out. I know that I'm kind of checked out of the financial planning and financial industry right now to some degree. It's being checked out has actually given me a lot of time to sort of think about and investigate some of the news I've been neglecting here recently. Doug B says, I would like to go solar with my home energy, but the time to recoup the initial investment is high, and I think that technology will advance quickly to make installation soon obsolete. So I can tell you what has spurred adoption of solar in most states, where, like California, it isn't the technology and it isn't the cost of solar that has spurred the adoption. It is actually the financial innovation around adoption. All of these zero down leasing programs or zero down purchase programs, where you can get into solar and they can sell you energy from your rooftop at a fixed rate for a certain amount of years at zero cost to you up front, and it's already cheaper than having it on the grid. That's what spurred a lot of solar adoption. There aren't as many people who are like me, where I actually went out and bought my system, put it on there. I understand how it works. I can do a lot of the maintenance myself. I can disconnect it from the grid now myself in a legal way. I wasn't doing it legally for a while, but now I can do it in a legal way. I had that done. That is one of the things that's missing in a lot of locations, and also robust competition. So I got a rental property in another state, and and this is in Texas, and I was actually investigating putting solar on the rooftop of that, because it just simply would make it more attractive as a rental. If I want to sell it later on, it makes it a little bit more attractive too. The problem was the cost in that area. There were only 2 companies that did solar installs in this area, and this was a military town. But there were only 2 companies that did solar installs in that town, and they essentially had no incentive to lower installation costs. And it was more than twice what I paid in California, which was shocking to me to a degree. So I think that as it becomes more popular too, local competition is going to drive installation costs down. That's one of the largest pieces of the puzzle anyway, is actually your labor costs to do that. So. All right. Rome Lee says, do you own AMC or GME? No, I don't. And I don't pay attention too much to a lot of meme stocks. I'll be honest with you. It's an entertaining distraction. If I did invest anything, it wasn't going to be a significant amount. I'm not a YOLO kind of guy in terms of investments. I've already made my money investing. I don't need to take tons and tons and tons of risk in order to get outsized returns. So NVIDIA, Max McGinley says NVIDIA, is that spelled right? No, it's just NVIDIA, and the symbol is NVD. I think it's NVDA. I have a hard time spelling things if I'm not writing them at the same time. Yeah. So Intel is not catching up anytime soon. So Intel and NVIDIA actually have separate business models. They're not actually involved in the exact same spaces. So the GPUs that NVIDIA makes are completely different than the processors that Intel makes. The sort of supercomputing that NVIDIA is involved in, and the sort of specialized chips for AI, Intel is not necessarily even engaged in that at this point. They're starting to, but they're not necessarily engaged in that. And in terms of like cloud services and edge computing, at this point, NVIDIA is just pretty far ahead of Intel. So Intel's not going anywhere. Intel has plenty of business in creating like CPUs for all kinds of computing, but they don't do a lot of the specialized things that NVIDIA does at this point. So Shell Feng Ching says, can you talk about Fisker EV? So I'm going to be honest with you. I lost interest in Fisker a while back when I sort of evaluated their chances of success at being fairly low, and I haven't looked at them in a while. I'll probably be taking another look at them here in a couple of weeks or so. And Max McGinley says, thanks for answering, Jason. Much appreciated, man. Tom Lou says, the delisting thing will catch Neo 3s later. Right now, not sure if I need to add more. Docu is done, or we can nibble at $91 share. First of all, I definitely don't think DocuSign is done. I think that the panic around DocuSign right now is a bit overdone, and I think that DocuSign has a great future. They're not the only game in town, but in terms of brand dominance, and especially because I work with document signing all the time remotely, and in terms of brand recognition with clients, it is simply the most, and I've used a couple of different document signing companies, but in terms of brand recognition, clients are just most comfortable using DocuSign. I don't know when or if that's going to change. And there, I have a couple of concerns about DocuSign too. Don't get me wrong. I'm not 100%, oh, this company's going to 10X or anything, but I think it's a good, steady producer from here on out. Entry point, I think this may not be a really terrible entry point into DocuSign at this point. So, William Lee says, do you day trade or long-term hold? What is your strategy as far as charts patterns? So I'm mostly almost 95% a buy and hold investor. If you look at, and mostly that I came to that conclusion, I've been investing for a long time, close to 30 years now, but I came to that conclusion after 7 or 8 years of investing, reading a few things, but not only that, I had access to reams and reams of data where I could see the performance of professional traders, day traders, and they weren't any better than buy and hold investors. And they certainly had a lot less or a lot more in the way of stress in their life and a lot more in the way of taxable events, right? So in terms of charts and patterns, I don't pay too much attention to charts and patterns. That is another strategy that has been proven over time to not add anything to the value of your investment account. Dollar cost averaging, on the other hand, definitely the data there shows that that is definitely helpful as you're building wealth. Not quite so helpful as you're drawing down your wealth in retirement. Like dollar cost averaging sales on your way out tends to hurt you in terms of long-term return. Whereas as you're building your wealth, you tend to acquire those shares using a dollar cost averaging strategy at lower than the average cost of those shares over that same time period. I know it's confusing to see that, but or confusing to understand that, but that is actually the case. Let me see here. Have we talked about SoFi yet? So we haven't talked about SoFi yet. SoFi got absolutely pounded. If you guys I'm a long-term investor in SoFi. I've got over 6,000 shares. It was a depressing November, to say the least, and it hasn't been the best December at this point. But the stock is climbing again, and some of that, very little of that, had to do with SoFi specific news. Most of it was like macroeconomics, right? It's fear of rising interest rates, which a lot of folks don't understand, that most financial companies tend to do really well in a period of rising interest rates. It's just that the increase in profits tends to lag a couple of quarters, as it takes a little bit of time for financial companies to take advantage of the spread between deposit operations and lending operations. It takes a few quarters there. So the fear of rising interest rates is a very short-term view when it comes to financial companies. When it comes to other growth companies, that fear is not necessarily overblown, but a few things have changed in the markets in the last couple of years that make it a little bit more likely that some of these growth companies are still going to be able to access cheap capital. And what I'm talking about is convertible bonds here. This is something that I covered in my Patreon group. Convertible bonds after the .com crash had kind of gone out of fashion, and Tesla brought them back. They didn't revive the entire sector from the dead, but they certainly made them more popular again, where they would sell bonds on the open market to people at a really low interest rate with the right to convert that bond into shares of stock at a specific strike price, right? In the last couple of years, they've been able to, and Neo did this too, they were able to issue zero coupon convertible bonds where you weren't paid any interest. You were just guaranteed your money back on these bonds, and you had the right to turn them into stock if the price rose above that strike price. I think that this type of security is going to be employed more and more often if interest rates rise, and it's going to keep the cost of capital down for the company at the cost of slight dilution to current shareholders. If you are a Tesla shareholder, this is something that you experienced over and over and over. Tesla raised tens of billions of dollars through, well, actually, maybe billions. I don't know about tens of billions, but they raised billions of dollars through the issue of convertible bonds. This is going to become more and more popular as interest rates rise, and it's a way of these companies controlling the borrowing costs. All right. So Tom Liu says, what are the limitations of QL? I assume you mean QYLD, right? And that is, well, I forget the name of the company right now, but it's a fund out there that invests in covered calls on the NASDAQ 100 index. All right. There's a couple of limitations for that. The biggest limitation is this. That fund makes money based on volatility. If the market goes straight up, it means that the cost of those covered calls is actually declining, right? If the market goes straight down, it means that I'm saying if the market goes straight up, it means that the cost of those covered calls is going to increase, and the shares going to call away, and sometimes they have to buy that index back at a higher and higher price. And if the market goes straight down, then the cost of those covered calls decreases over time, right? So a lot of folks don't understand that right now, in the last year or so, the Q yield has made a lot of money because the NASDAQ 100 has been very, very volatile, back and forth, back and forth, back and forth. The other thing on this is that you are really limiting your growth potential in this case, right? You aren't getting compound growth. So I think that it's QYLD and QYL or QYLR or something. One of them is growth, where they only sell calls on half the value of the index, and then they let the other ride. Like, I own some of that, and I just can't think of the symbol right now. So I own some of that right now because I want some of that current income because I live off of some of the income from my investments. And but I also don't want to sacrifice future growth. If you look at QYLD, it has gone between $16 and $23 a share, but that's over like the last 6 years. And there's very little growth in that portfolio. You are getting a 10 to 12% yield on that based on not a dividend yield, but it's actually income that's generated from selling covered calls. But kind of the most you can hope for if they're buying these calls in the index with a delta of around 0.7, meaning there's a 70% chance that the calls are going to expire out of the money. I think the long term, the best you can hope for is about 1% a month, because sometimes that strategy is not going to work, and the calls are going to get exercised, and you have to buy back at a higher price because 90% of the index has to be you have to sell covered calls on all time. That's part of the ETF, right? So that's sort of the risk there, is that if we go through a period where it's not very volatile, then you're going to see income decline. If we go through the period where the NASDAQ declines over a long period of time, you're going to see the value of those calls drop over time. And if it goes up too fast, you're going to see the expense of getting back into the market decline over time. So the real risk here is that I think that if we see sustained growth in the NASDAQ at over 10%, then Q yield is not going to keep up with the market. They're not. You will actually make less money owning Q yield than you would simply by owning the NASDAQ 100. And I think we may get to witness this in action. Like, so I have a couple of people that have specific income goals in mind, where they have a bill they need to pay every month for the next 5 years. So they own a combination of QYLD, XYLD, and it's QYLG and XYLG. Those are QYLG is the one that's focused on where it's 50% covered calls and 50% growth, and XYLG is the one that's based on the S&P 500 or the Dow 30. I can't remember which one it is. I think it's the S&P. But those are the ones where they're a little bit, or your yield is more like half of QYLD and XYLD, but at least you have a potential for compound growth. So with QYLD, you're really limiting your potential for compound growth. Okay. And let's see. Grace Terry says VOI.FYI. I don't know what you mean by that. Yeah. So definitely lots to talk about with SoFi though. Like I said before, I kind of got diverted there. Very little company specific news has come out. Most of what's going on is macroeconomic at this point. Marvel on. Let me see what you're talking about here. And I'm going to bring up a way to check out tickers as you guys talk about them. And let's see. And my internet connection is Marvell Technology. Okay. This is a stock that I get asked about quite a bit, and it's not one that I've covered in recent years. And my internet connection is so slow that I'm not bringing up the data at this point. Hopefully, my internet connection is not stuttering right now. But I will say one thing for them. For the last 4 quarters, they've either met expectations or beat expectations in terms of revenue. Their guidance has increased every quarter, and they've beat their revenue expectations every quarter as well. They did take a pretty hard dump so far in terms of their actual earnings. They're showing a $277 million loss this year on about $3 billion of revenue. So in terms of where they are on a 52-week range basis, like showing a loss this year and still being at pretty close to your 52-week high, I need to see someone else's bull case on this to really take a serious look at this company right now. And I've looked at it a couple of times before, and I've looked at this company a couple of times before and have not found a reason to invest in this company, especially based on what they did in the past, where they were really Ethernet oriented, right? And they didn't have a lot of other solutions. Now I understand they probably diversified their product lines since I've taken a look at this. So, but Alice says, "Hi Jason, I assume you have a question, Alice. I'll get to it as soon as possible." Hello, Jason. Which banks do you invest in? I'm trying to decide between Citi, Morgan Stanley, GS, JPM. So in terms of big banks, like I used to hold a lot in the way of big banks, and now I find it's more valuable to hold those companies through an ETF, whether that's a concentrated financial ETF or a mutual fund or index fund or something like that. I don't think it's really you can really find. I do think we're going through a period where it's great to own financials in general. If interest rates are rising, you'll see a short-term shock to those companies, and you'll see a decline. And then after that, their profits are going to increase and increase and increase every quarter that interest rates are being raised. Right? It just means that yes, their cost of capital gets a little bit more expensive, but the loan rates grow faster than the cost of capital does for financial companies. So any one of those companies, in terms of a rising interest rate, is going to do well. But I'll be honest with you, I like Morgan Stanley and JP Morgan a little bit more in these cases. For personal reasons, I like and professional reasons. I've worked with a lot of Morgan Stanley products. I've worked with a lot of Morgan Stanley representatives over the years, and I'm impressed with their product lineup. And if a company does a lot of things that I don't like on an ethical basis, it means they're probably pretty successful in the financial industry. And I know that sounds weird for me to say, but that's one of the reasons why I kind of branched out on my own, is because I wanted to be able to do things in a way that I consider to be ethically pure in a lot of ways. You're never going to get that from a Citibank or a Morgan Stanley, or a Wells Fargo or a JP Morgan. But Morgan Stanley, though, operates from an investment-based standpoint first, and a consumer bank or second. So I like Morgan Stanley or JP Morgan more than any one of those because of their investment bank sort of focus. Raul Gill says, what about Lucid? So I do think that the investigation by the SEC won't turn out to be all that much. My question when it comes to Lucid is about their overall future in general. And I just think that their pathway to success is fairly narrow here, especially when you have so many other players that are about to be stepping into the picture here. And, a lot of Tesla's success was driven by like gadget geeks like me and or people that wanted to see this electric future come about, and they were able to capture almost all of that of the funding that was available out there from essentially what were cult members. Let's be honest, when I invested in 2011 in Tesla, there wasn't a really great reason to invest in the company, and there wasn't a great reason to believe even that Elon Musk was going to be that successful. SpaceX had almost failed. Both Tesla and SpaceX had to be rescued by Peter Thiel. I invested in the company, and it wasn't a huge initial investment. It was only like $3,300 for my first 100 shares. But it was a giant risk in that time period based on how much money I had. I didn't have a lot of money back then. And it was, but as time went on, you saw that the people that were, hold on for dear lifers like me, I know that's a common phrase now that people use, but we didn't have a word for it back then other than like Tesla freaking nutcases. But I was a firm believer in an electric future, not necessarily in Tesla, but Tesla was my only option. Now people have all kinds of options for investment. So my question is one thing I know that Lucid has to do is they have to go back to secondary markets over and over and over and hit them up with secondary offerings of stock, bond issues, convertible bond issues. Now investor attention is divided between them and Fisker and Rivian and all these Chinese companies that are, EV companies that are coming out. So I don't know at all whether or not they're going to be able to generate enough interest in their secondary offerings to survive. That's my case. They need billions of dollars to build out production capacity in order to compete with the dozen other companies that are entering the market at this point. Tesla already has a brand. They already have a name. They already have unlimited demand for their product. I don't know that Lucid's demand for their product is unlimited. It may be limited to just the contrarians. And this is something that I quote someone from my Patreon group all the time on this, but he claims that there's always going to be a market for them just based on contrarianism, that if 1 million people own Teslas, there's going to be 100,000 people that want something else. The reality is I just don't know how large that contrarian market is. And if those contrarians have other choices, are they going to choose a $160,000 Lucid? Or are they going to choose a $90,000 Rivian? Or are they going to choose a $60,000 Ford? I don't know. So so Lucid to me is a big question mark. I don't own any Lucid. I'm not likely to buy any anytime soon. I would want to see it, and I'm probably not likely to be the earliest investor in any new EV companies that are coming out unless they're truly special, right? Unless they got something that no one else has, that might be a process of some sort, that might be a technology of some sort, and that might be branding of some sort. I don't know. But so I'm kind of hesitant to take on, after owning Xpeng and Neo, a little bit of Lee. I only have like 50 shares of Lee left, and Tesla, and riding those wild stallions for a while. I'm a little bit more cautious going forward about any of the newer players. So, Tom Liu, your view on Qualcomm and Oracle. Qualcomm is a local company here to San Diego, so I do know quite a few people that work for Qualcomm. I do know quite a bit about their business, and I will say that I have every confidence that Qualcomm is going to do quite well in the future. But what type of return are you looking for on your stocks, right? Qualcomm is a blue chip stock now, right? Or essentially in that blue chip-ish sort of category. I do think they're going to see significant revenue growth over time. I do think that they have an innovative culture. But my question is are they going to be rewarded for that innovation? And by the buying public, by the stock market? That's the question that I don't know. Oracle, on the other hand, Oracle is facing something that they haven't really. They've always had one or two or three competitors in that enterprise management, data management space. That environment is changing pretty radically for them. And most of you guys aren't old enough to remember when they had plenty of other competitors in the space. And you aren't old enough to remember when Microsoft, SQL Server and Microsoft database technology was never expected to compete with Oracle's. It was never supposed to do that. It was never supposed to be as competitive or as capable as Oracle's technology. Well, that's all changed. It's 20 years down the road. That's all changed. And now I think that in turn, that is possibly changing with Oracle, with Amazon Web Services, with some of NVIDIA's cloud services, with a half a dozen other new players coming in. I think Oracle, without acquiring some of their competition, they run the risk of being disrupted. I think that is one of the keys. So I do own some Oracle shares outright. This is one of the positions. So between Shopify and Oracle, these are the two positions that I may look at disposing of in the next 2 to 5 years. Right? Shopify, just because I think they've kind of reached their peak as far as valuation. Oracle, because I think they may actually end up getting disrupted over the next decade. So so I don't tend to sell things very often. I buy a lot. I almost never sell anything unless it's options. I do roll options, guys. Meaning if I sell call options, I'll buy them back and resell. That's the extent of my short-term trading. Meaning I'll buy them back when a large part of an option's value is based on the time until it expires, right? And so if you sell an option, generally as it begins to get closer to that expiration date and it's still not close to being in the money, then the price is going to drop very rapidly. And sometimes I'll buy back that option at close and I'll resell it. But that is the extent of my my short-term trading. I generally don't short-term trade stocks in a lot of ways. And if I have a reason to sell a stock, it's going to be a long-term reason to sell a stock. I'm not going to do it because it's up 100% in a week or it's down 50% in a day. I'm not going to do it because of that. It's really, I'm looking at the long-term potential and would this money be better served somewhere else for the next decade, right? So I know most of the people I work with and most people I know who've gotten wealthy didn't do it by investing in stocks. They did it by having a business. But the few folks that I know that did become wealthy simply by having like a regular job and investing, it was almost always based on long-term conviction with particular stocks or index investing. And I know people that that are 45 years old who've done nothing but contribute to their 401k or their TSP too. A couple of them are military officers, and they've got $2.5 million in there, and they're 45 years old. So it's definitely not a bad way to invest either, guys. So I know we talk about stocks a lot on this channel, but there's nothing wrong with being an index investor as well. And to be honest with you, you're going to outperform a lot of people that most people that think they're stock traders. So, have you looked into the Proterra EV bus? Actually, yes. Based on your success, on your suggestions, I have looked into that. So I have some concerns about the EV bus thing in general that I probably want to talk to you guys about in our Patreon group first. But I'm planning to do a video on a couple of different players. I covered a little bit of BYD's bus making operations here in the U.S. They actually have a factory here. They have one in California and one somewhere else. But there's a couple of other newer players that are showing up in that. But so I have some issues. The units that cities are buying are actually fairly low, meaning a city's going, oh, we're going to buy EV buses, and they'll buy 10 or they'll buy 15. So a lot of these companies don't have a way to scale production at this point, and they just don't have a way to scale production. So my estimations are a little bit harder to make as far as how much money they can make over time because their production levels are so low. So that's one of my concerns, and that's one of the things that I'm looking into. I think there's a market there. I think there's an investment there. The problem is I just can't nail down which one there is right now. So Ask questions. What do you think of the metaverse and creating digital assets and then to sell on those markets as utility? Okay, so the wording of that question was a little strange, but I think I understand what you're talking about. So the metaverse is going to evolve in ways that you and I absolutely cannot predict. And NFTs are going to be a huge part of that. So whatever NFTs are today, that's not what they're going to be in the future. We talked about this a little bit on the last live stream. Like right now, the clearest thing, the most obvious thing you're going to be able to do with an NFT in a metaverse or a game type setting is to use it to create scarcity, right? But Adam, I bring him up constantly because he's kind of our crypto expert in the. He's like a literal crypto expert, not just some random dude on the internet that does YouTube videos, but he actually works in the industry, and he talks about the various uses of NFTs. And he got me thinking about all of the different ways they're going to be used. So the NFT is essentially going to be the currency of the metaverse, but that currency is going to be expressed in whatever tokens that metaverse uses, right? But it's the NFT technology is really going to be that currency, meaning that non-fungible portion of it, the non-replicability, is that a word? But that is the vehicle or the currency, the modus of transaction that's really going to create value inside of the metaverse. Predicting how that can be done right now is really, really difficult. It's a lot like going back in time to 1993. And the reason I mentioned that year in particular is because I was dating this German girl at the time. And I didn't speak German at the time. And her uncle contacted me by email saying, take a look at this. This is going to be the next big thing. This is going to be the greatest thing ever. And I was very much into computers at the time, but not very much into the internet. And he started talking about the internet, and I had no idea what he was talking about. But I knew one thing: I liked something called NutNet at the time, which was a message board, and I knew that I needed my Cisco router to access it. So in 1993, I went out and bought a couple of hundred with a small inheritance, really, really small inheritance. I went out and bought a small amount of Cisco, and this is when I was like 19 years old. And then I immediately left the country for a year or two, and didn't even think about it. When I came back, it was quite a bit of money, right? But it's one of those things. There was no way to actually predict what was going to happen with the internet. You just knew it was big, you knew it was happening, and you wanted to be a part of it. And all of the predictions of what internet commerce was going to look like, when it was going to happen, they were all wrong. They were all wrong, right? So we had all these ideas of what was going to happen with e-commerce, and it was going to happen next year. Well, I can tell you one thing, like buying clothing on the internet didn't pick up till 20 years after people said that it was going to happen. Right? By 1994, I thought that everyone would be buying clothes on the internet, and that's it. A couple of things I didn't understand. Number one, I hate shopping. I always hated in-person shopping. Don't want to go to the mall. Don't want to shop for anything. I'm happy buying everything online. Not everyone is like that. But it wasn't really till like 2014, 2015 when we had better control and understanding of supply chain, how to handle returns and do all that stuff, that we saw clothing really take off on the internet. One of the things that, interestingly enough, who are some really big players that don't do much online in the clothing industry that you don't think of? So TJ Maxx and Ross Dress for Less, they don't do any e-commerce or very little e-commerce. And why do they do that? It's the low margin on their very cheap clothing and all of the returns you're expected to do from online shopping, right? So it's only your larger brands with more margin that have moved online that can absorb some of the cost of handling all those returns. That was one of the things that people didn't really understand at the time. So, and that took 20 years to work out and really understand for us to have super successful retailers of clothing online. Before that, people were successful a little while, and then they got eaten alive by expenses. From about 2014, 2015 on, that's when you started to see real successes in online clothing retailers, beyond like just t-shirts. So that's one of the things that was very difficult to predict, that no one understood about e-commerce when it started off. I'm telling you, a lot of that's happening right now with the metaverse. For every prediction, for every 1,000 predictions about the metaverse, 999 of them are going to be incorrect. And I think it would behoove you to take, for right now at least, to go out and buy a metaverse focused ETF like Round Hill Ball's Meta ETF that trades under META. You can get that through it trades on the New York Stock Exchange. You can get that through any app right now. And it behooves you, I think, to have as wide of an investment focus right now when it comes to the metaverse, and maybe narrow that as time goes on, as we start to see winners emerge. A couple of the big winners that I'm looking at here, of course, Unity Software, NVIDIA, Roblox, although I have some issues with Roblox. Number one, it's really, really volatile, extremely volatile. So I was able to snag a couple hundred shares at really low prices recently when it dropped, which I'm very happy about. But in terms of a long-term hold, I really think that Unity is a more versatile platform. And the pricing model is very attractive, and I think that, and of course, it's not really built for kids either, like Roblox is. I think that over time, Unity's platform is going to be very, very successful. The Unreal Engine is great too. Unfortunately, I can't invest directly into Epic Games. I could do that in a roundabout way by investing in Tencent, but eventually we have to start talking about Chinese stocks and the potential for delisting at some point. I'm getting more concerned. Well, the first hubbub about that beginning last year around this time period wasn't all that concerning to me. I thought this was an issue that's going to be solved around the negotiating table at some point. That negotiation does not look like it's happening right now. Time is running out on that. I realize it's 3 years away at this point. But in terms of the investment world, 3 years can be an eternity, or it can be very, very short. So I'm starting to become a little bit more concerned about that. And that includes, your Neos and your Xpengs and all, especially when you look at the privacy and data concerns that China had with Didi. Was that really about privacy and data concerns, or was that due to the fact that they went public on U.S. markets without really getting prior consent from the Chinese government? I can tell you one thing. I can definitely, and I've said this before, but I can definitely see a day when there are areas in China where you are not able to drive a Tesla. And I could see a day where there are areas in the United States where you're not allowed to drive a Neo or an Xpeng car. Just based on all of the LiDAR and the cameras that are on these vehicles, you can park a Tesla vehicle near a busy intersection, near a military base, or near an NSA facility or something like that. And it is an incredible intelligence gathering device. You're going to be able to identify people walking especially with facial recognition technologies and things like that. You're going to be able to identify people walking in and out of buildings. You're going to be able to identify traffic patterns. You're going to be able to capture signal intelligence, all kinds of. These are incredible intelligence gathering devices, just based on all of the things that they need in order to gather and use all the data for self-driving. This wasn't done intentionally as an intelligence gathering. Well, I mean, actually, it was done as an information gathering device. So I can see one day that there are going to be restrictions on these vehicles at some point. So the future isn't clear with those. It still isn't clear. So yeah, hold on a second here. Let's move on. So hi, Jason. What do you think about Draftkings? So I like Draftkings' business model. And I will say, let me preface this by saying one thing. I don't do, I haven't done sports betting in years and years and years. And I never really did a ton of it. So it's not a market that I'm intimately involved in out of like self-interest. But I started looking at it because it was suggested by people in the original Patreon group that I had for that portfolio manager thing that I did like a year ago. And I started looking at it because of that. And there were times last year when I thought it was fairly undervalued. I still don't own any of it, but it's something that I'm definitely looking at. Honestly, I kind of look at investing in Draftkings almost on a daily basis at this point. It is an industry in which I own no investments at all. So it is something that I see would probably be would help increase the diversification of my portfolio. But in terms of a standalone investment, I'm still trying to wrap my head around how they're eventually going to make how they're eventually actually going to start growing their profits. They're growing revenues right now. They're not really growing profits at this point. And that's a business where I want to see profitability before I invest. Yeah, let me see here. So Doug B says, I like NVIDIA, am invested there. I'm leery of adding because they just bumped up 30% back in October. So I think that I see that in terms of an investment, that NVIDIA acts in a lot of ways like Tesla did, with one glaring exception. Of course, NVIDIA actually made a profit, right, the whole time. But NVIDIA tends to go through these big jumps and then these long flat periods. And I mean, over the years, I've made two mistakes with NVIDIA. And a lot of it had to do with getting impatient during one of those long flat periods was like more than 18 months, where for me, at least, I was either underwater or close to underwater for like 18 months. And ended up selling out some of it, and that was right before they announced a split, right? Or right before it jumped up to like, jumped up by like $80 or something. And so that was kind of a big deal. But in terms of a long-term view for NVIDIA, I think that 10 years from now, Doug, you're going to look at NVIDIA today at $300 a share and think that it's pretty cheap. Here. So Christian Thompson says, thanks for doing these. I appreciate you sharing your perspective and insights on these markets. Thank you so much, Christian. It's always nice to see you guys and to get the super chats from you guys. I would do this whether or not you guys are giving me super chats or not, but I always want to recognize. Yeah. So let me see. So GC, are we talking about SoFi when it comes to SoftBank? Then I would agree that SoftBank played a huge role in the sell-off, as well as Chamath Palihapitiya selling off 15% of his stake. Although Chamath selling off 15% of his stake, that doesn't concern me at all, simply because I know that he's probably going to use those funds to just fund another project. But SoftBank, let's remember, they are basically an incubation conglomerate. They make investments in companies all the time to bring them public, and then they dispose of those shares, right? They do this all the time. They have they're invested in thousands of companies across the world, and a lot of them you probably never heard of or never will hear of. Some of them won't ever go public, some of them will, but they buy in and out of companies all the time. So I'm not hugely concerned about either one of those. I used the opportunity. I use this as an opportunity to buy more SoFi, right? I'm long-term focused on SoFi, but I'm even looking at, I don't know if you guys ever purchased any LEAP contracts or anything like that, but I purchased, LEAPs are just deep in the money calls. And the way the math works on those is you use a lot less in the way of purchasing power, but you can get similar or almost exactly the same performance out of the LEAP, as you can out of buying 100 shares of stock, usually using anywhere from 40 to 50% of the purchasing power on that. So it's as one guy in my Patreon group puts it, it is no recourse leverage, right? So there's no recourse. So I use this as an opportunity to buy some pretty cheap LEAPs on SoFi, set to mature in January of 2024. So like I'm not stuck with those. I could trade those if they go up in value, but I'm committed to this particular price, at the stock being over this particular price. And I think that my break-even point on that would be $28 a share on those LEAPs that I purchased. So, and these are deep in the money calls that you're purchasing. So yeah, I think that I think that SoftBank played a role in that. It's one that I completely ignored and saw it as a buying opportunity. And so did a lot of institutional investors. So institutional buying really picked up when SoFi dropped, whereas before SoFi was actually kind of criticized for not having so many institutional owners. Well, that percentage has picked up a lot just in the last 3 weeks. Doug B, Boss Music. Of course, Doug B is a smart man. Doug B is a part of my Patreon group. So yes, he is a very smart man. So the NVIDIA is going to be a whale in the game. So one of the criticisms I constantly get about my enthusiasm in particular when it comes to NVIDIA is that people complain about how large the company already is. They're just getting started. NVIDIA is just getting started. If you think it's large now, wait till you see this company in a decade. It's going to be an absolute monster in a decade. So, and you think NVIDIA is future is metaverse, blockchain, and crypto. I think that's a small portion of their future. I think that AI and autonomous technologies are really the future of NVIDIA. All of that, I think the metaverse, they already have their own metaverse. I just can't remember the name of it off the top of my head right now. But yeah, I do think that gaming and things that could be considered metaverse related probably made up a majority of their revenues a year ago. Today, that's probably not true. And in the future, I definitely think that automated technologies are going to make up a majority of their yeah. So what's a better investment, stocks, 401k, or index funds? So inside of your 401k, you can hold index funds. In a brokerage account, you can hold index funds or stocks. For most people, and this is the advice that Warren Buffett gives, and I do nothing but talk about stocks all day long because that's what's interesting to me. But that only makes up about 30% of my overall investment portfolio. So I own business interests, meaning like I actually own companies, rental properties, and a ton of index funds as well. A lot of what I use index funds for are to own things that I really don't want to bother to look into because I find it boring, or I don't think there's an advantage in any information that you can get out. Meaning that so much of the information about this company is already public, or this industry is already public, that there's no way to gain an advantage and be in front of an innovation curve or technology curve. So, of course, when I'm talking about AI, when I'm talking about electric vehicles, when I'm talking about genomics, or I'm talking about a lot of other industries, that's not the case, right? Choosing a small player early and that can give you some outsized return, and even some weird things. I made a lot of money on Hansen Natural Products back in the day, because what I saw in the food industry was that natural, organic, and all this stuff was going to be very, very big going in the future. And I got lucky, and I told this story so long story short, this girl dumped me, and I lived in a place where you couldn't buy alcohol on a Sunday. So I went into the store, and literally I couldn't buy beer, but I could buy root beer. And it was a great root beer. And I ended up buying stock in the company later on. It was Hansen Natural Products. And today, that stock no longer trades under the symbol HANS. It trades under the symbol MSTR, which is Monster Energy Drink. Okay, so you get where I'm going here. So I probably had 8,000% return in that stock over time. Paid for a lot of things in my life. Helped me to diversify my interests away from simply owning Tesla. But that was actually probably just as big an investment that I made as Tesla was over my lifetime. And it wasn't obvious, right? Another big investment that I had was Asta Funding. They did debt collections. You wouldn't think you made much money on that. I think eventually I made about 6,000%. That company's not even around anymore, right? Even after a 6,000% run up in stock price. But so for many industries where I own those index funds, it's like the oil industry. I've been winding down my individual picks in the oil industry for a long time, and just taking the money that I'm selling that and just pushing that back into like an S&P 500 fund, or sometimes I'm not even buying energy specific mutual funds anymore, or ETFs. It's all just going back into an S&P 500 fund or VTI, right? So it really depends on what your goals are. If you have extremely short-term goals, then stocks are probably your better bet. If you have a long-term strategy of saying that, this is where I want to be when I'm 40, this is where I want to be when I'm 50, this is where I want to be when I'm 60, then your index funds are going to be hard to beat. Most people don't beat the index, and most people that say they do are just lying. And if you do beat the index, the one big mistake everyone thinks that they have, or big mistake, is they think that they attribute their success to their own genius instead of luck. I know for a fact that my success in investing to a large degree has been luck. I was born in a time period where we've seen incredible technological change. I was born in a time period where it has only become easier to invest. Since I became an adult, and literally one of the first jobs I had was as an adult was working at a securities company. I worked as a programmer, but I worked at a company called Momentum Securities, and I worked as a programmer for them and wrote software. So I was surrounded by it. I had disposable income, and it was right in the middle of the dot-com boom. And I didn't buy a lot of dot-com stocks. I bought a lot of like financials at the time, and because I was in the financial industry, which those didn't suffer during as really at all during the dot-com bust. So a lot of that is just luck. I had money right before times of economic expansion, and I was interested in things that happened to be part of a technological revolution, and to this point that hasn't changed. I'm smart enough to realize that it's not my genius that made me money is investing over time. A lot of it had to do with luck, being at the right time in the right place, and having disposable income. I'd say that the only real smart move that I made is spending less money than I earn and always being able to save. So, Boss Music says, can we talk about Redwood Materials and its future IP evals? I don't know anything about Redwood Materials. And I can tell you, Redwood Materials, I'm going to look this up after our live stream here. And if it has something to do with like the EV battery supply chain, then I'm probably going to be interested in it. But I'm probably not going to be, or something like that. I'm probably not going to be interested in a lot of other things, a lot of other materials companies at this point. So let me see here. Tom says, is it right for UVXY? Let me look at that here. Always like to take a look. Okay. So Tom, how are you? My question to you is, how are you holding UVXY? Is this something that you do as a daily trading instrument or a long-term hold? Because just based on like the decay factor or the time decay factor, holding these leveraged ETFs, you're probably going to lose money over time, whether or not the index goes in the direction that you want it to go in, right? If your intention is to do this on a short-term basis, then it might be a good way to make money here. But there doesn't seem to be a ton of information on this particular, just short-term futures, but futures in what? The performance of the VIX short-term futures index for single day. Oh, so it's on the VIX. Okay. Yeah, honestly, man, that's not necessarily one that I would that I would try to play on a daily basis. I did during the 2008 crash with some degree of success, buying like a 3 times financials inverse ETF. Had a lot of fun with it, but eventually I actually got burned on it. Kept losing some money towards the end of the crisis when things started to improve, and I ended up losing some money on that too. In terms of the VIX, though, it's just not really all that predictable. I would say that good time to try and play this would be if we start hearing concerns about default again, if there's government shutdown, or if we get really close to that debt ceiling again. That is one of the things that really pushes the VIX up pretty high. So yeah, that is something that I may take a look at. This is not something that I actually would do though. So Doug B says, about SoFi, I was thinking a while back that some of the underperformance may have been to Omicron. I was a bit worried about student loan payments to be deferred again. Hopefully that has passed. Yeah, hopefully that's passed. I went out on a pretty big limb, I think a week ago, when I talked about Omicron being highly transmissible and not very severe. That limb, though, was not that big because I actually do read a lot of like scientific papers. And one of the ones that I read, like I said, was the supposition that this variant actually evolved in a single immunocompromised individual. And in order to evolve in that single immunocompromised individual without actually killing that person, it would have had to not made him very sick, right? So that's when I sort of was saying, hey, this is probably going to turn out to be not such a big deal. I really think that with SoFi, though, we're just going to see quite a bit more underperformance until it becomes obvious that this company is ridiculously undervalued. And I do think that it is ridiculously undervalued. I am acquiring shares in that company to the degree that sanity will let me do it. Meaning I'm not going to get overbalanced in SoFi. I'm not going to have more than 10% of my net worth in any single asset ever. But I'm going to keep acquiring until I get close to that point. I think on a long-term basis, I think this meaning on a really not even that long term. On a 5-year basis, I think this company is going to do very, very well. Hold on a second. Last time you said we will have a big market volatility in a couple months. How do you know that? What signals and signs made you believe that? Which was true, by the way. So I always get a little bit nervous when people say, hey, one of your predictions came true. So that wasn't necessarily looking at making a prediction. It was looking at all the indications, the current indications, leading indicators that we had in the market. And one of those was the VIX at the time. One of those was geopolitical events. One of those was uncertainty around what the Fed was going to do. And of course, uncertainty around what was going to happen with the coronavirus going into winter. So none of that was really prediction. To me, that was really just sort of obvious that the market doesn't like uncertainty. And uncertainty is always projected in the future, right? Markets thrive on certainty of any sort, and it doesn't mean if it's certainty with bad information or certainty with good information. That's what they like. They don't like. So anytime that I'm talking about seeing market volatility in the next couple of months, it means because there's a lot of factors that create uncertainty. So right now, everyone understands that interest rates will be rising as the Fed starts to taper. I mean, they're going to buy fewer and fewer bonds. Interest rates are going to rise. That's first going to be evident in short-term lending rates, and then it's going to creep into longer-term lending rates. And the signs are really, like I said, anything that is creating uncertainty. There's always a reason to believe that the market will crash, right? You guys know who Ray Dalio is? Ray Dalio is a hedge fund manager. So as long as I have had a securities license, Ray Dalio has been predicting the end of the world. There's another guy, I can't think of his name right now, but if you had Ray Dalio was actually a successful investor, but there was another perma bear out there that if you had invested in his fund in like 1980, between 1980 and like 2002 when he retired, you would have averaged an 18% annual loss, right? But yet this guy managed several $billion, had several $billion under management for 25 years and collected his 2% because he was a hedge fund manager, but he lost 18% on the annualized basis for 20 something years, right? There's always reason to be a bear, and being a bear doesn't mean you're not going to get business or you're not going to get attention. You're not going to get clicks on your videos. I will be bearish when there's a real reason to be bearish. There is not a real reason to be bearish about this economy, guys. We are coming out of a pandemic. We are coming out of economic disruption. Never looked better in terms of household savings and income coming out of a crisis of any similar magnitude. I do think that we're on the precipice of a long economic expansion. I would just like that economy to be managed in terms of inflation expectations. So I do think that interest rates are going to come up. If you may not even be old enough to remember when interests were higher than they are now, but getting a home loan at 6 or 7% interest rate to me still seems low in my mind. When I look at the interest rate my parents had on our house in Texas when I was like 16%, that sounds crazy today when you can get loans on a 30-year basis at 3.25%, right? But that was at least buying a house at an average interest rate of 7% was a reality for the last 70 years. And I think we're going to go back to something like that. It didn't mean that we didn't have bull markets when interest rates were high. It didn't mean that we didn't have bear markets when interest rates were high too. It simply isn't the only factor that's going to affect the economy. I do think that that there are more things working in our favor in this economy than working against us. All right. Steve O says, ChargePoint, please, is it a buy based on future growth? So I do think ChargePoint is going to grow, but you need to manage your expectations when it comes to ChargePoint. All right. The investor deck and the sort of internet culture surrounding ChargePoint to me is kind of unrealistic. They're like, oh, ChargePoint controls 70% of whatever nationwide. They really don't. The largest charge provider in the United States is still Tesla. They just started opening up their charging networks to other vehicle types. But nothing about charging a vehicle is really proprietary technology, right? They're simply glorified plugs. And which means that anybody who can get into the business of using plugs is going to, and as infrastructure expands, and no one has a serious competitive advantage. And pretty soon, you're going to have apps and network sharing agreements where all of these companies are going to be doing a lot of colluding. They're going to be doing a lot of acquiring each other, like EVgo and Charge America and ChargePoint, and I just can't think of all the other companies that I've seen out there at this point. But if you ever been on the app PlugShare, just in San Diego alone, there are 37 different charging providers just in San Diego alone, 1,000 different charging stations. Now, some of them are level 1 stations, which is basically trickle charging, but a lot of them are level 2 or supercharging stations. So nothing is special about their technology, and it's going to be whoever wins the war on a business that actually ends up taking over the industry, right? So that's a little bit harder to predict than who makes the better car, who is a better manufacturer, who's better marketing. It's going to be a game of acquisition in this point, because every electrical component maker is going to start making charging infrastructure here pretty soon. And I don't think that anyone has even the slightest advantage at this point, other than Tesla, because they have the largest out there. And I know that goes against a lot of the things that you're told in media, but you have to think about this. Go on Amazon and you look at ChargePoint's charger. I don't care if it's the best-selling Amazon. What is special about it? And could some Chinese knockoff be made for half the price? The answer to that is probably yes. And it could be marketed by an American company, never know it. And it could be that all of the components are already, all the components are probably already made in China anyway. But it could be that there's pretty large margin in that device right now, and it's going to get caught as they see more and more competition. So I don't own ChargePoint for that reason. I'm probably not going to invest in that charging infrastructure as far as like individual stocks. I'll probably do something a little bit more general. I'm actually, in terms of that general supply chain, I'm actually more interested in investing in the battery supply chain, all right? Everything related to producing batteries than I am into the charging supply network. Certainly is going to be money made there, but it's a much lower margin business, as well as lots of competition, really low barrier to entry when it comes to technology. So yeah, that's one of the things I'm concerned with. So the other one was Blank Technologies. The other one, it's way overvalued. I think ChargePoint, even at $24 is or last time I looked at it was like $24. I think that's overvalued. I think Blink's over. I think everything in that charging space is just overvalued right now. It's not that we're not going to see tons of growth in this arena. We are. It's just the winner is going to be determined by who's in the business arena, not necessarily in the production technology, that sort of thing. All right. Invest with Jace says, hey, Jason, you know what, man? One of these days, you and I need to coordinate to get you on live on my live stream here so we can talk and we can get you some more subscribers. We can talk about different ideas. That would be great. Contact me at some point. I've asked you a couple of times, but contact me at some point and we can arrange to get on. I will even do it at a different time here. So Boss Music says, B of A has the most patents in blockchain technology. Okay. So I'm on my third beer here, guys. So what I'm saying is that having the most amount of patents doesn't matter as much as having the right patents. So don't know if you've seen thoughts on Cathie Wood buying Xpeng. All right. So if you guys, so I've been a big proponent of Xpeng for a long time, and I have to admit that while Cathie Wood is suddenly unpopular again, and people are starting to call her Crazy Cathie again, like they were 2 or 3 years ago, Cathie Wood, while she does face the same short-term pressure to perform on a short-term basis to stop outflows in her funds, she's a very long-term thinker, right? She's really investing for 10 years down the road and not tomorrow. She does some short-term trading, but I'm telling you, her overall strategy is 10 years down the road, looking at that technology adoption curve. I can tell you what she's looking at right now, though. Wright's Law, manufacturing capabilities, vertical integration, and technology. Xpeng is beating the pants off of the other startups in China right now. And if you weren't paying attention, it wasn't just that Xpeng outproduced NIO last month. They produced 15,000 vehicles and NIO only did 10,000. It wasn't just that NIO stumbled a little bit in October because of supply chain issues. It's the fact that Xpeng year to date has actually delivered more vehicles than NIO, more vehicles than Li, more vehicles than anyone, than any of the new startups out there. In fact, I was just looking at an article here on this. Let me see if I can share my screen. Hold on a second. All right, guys, I am technology challenged, so let me see if I can share my screen. All right, let's see if that pops up. That is not working. All right, I have no idea what I'm doing. So, let's see if we can do this. Can you guys see my screen? Let me know. You can't see my screen. It's okay. Okay, so I'm just going to talk about this article that I'm reading right now here. And this is I'm on autonews.gasco.com reading about China's EV startup delivery update. Xpeng outsells NIO year to date. And there's a little chart here where it shows the leaders, of course, where Xpeng last month sold 15,000. Li Auto did 13,000, crossed that 10,000 club. NIO was about 10,000. And then Nita, which is a division or a brand of Hosan Auto in China, sold 10,000 vehicles. You guys heard of them? Probably not, or most of you probably haven't heard of them. They weren't the only delivery champion, though, in November, but also the first startup to Xpeng was not the only the delivery champion in November, but also the first startup to deliver over 15,000 vehicles in a single month. So no company, none of those companies have done that at this point. And their deliveries have largely just grown and grown and grown, other than a small stumble between September and October there. And so they only have 3 models at this point. NIO has quite a few more. So there's more choices there, but they're also priced a little bit higher. Xpengs are priced a little bit lower, so they have a much wider market in that. But the P7 was the main contributor to that. They delivered 7,839 vehicles. But the P5 has grown from 400 deliveries in October and to 2,154 vehicles in this month. I think that number is just going to keep growing and growing and growing. You know, the price point of that is right on your base model. P5 is right around $25,000. So I think that number is just going to grow and grow and grow. Li Auto also became a member of that 10,000 delivery club in November. They've only got 1 model, guys. Remember that? And they delivered 13,485 vehicles. And this is a full-size SUV. When they have other models, this is sort of the electric drivetrain with the onboard gasoline generator, carries 10 gallons of fuel. It's really sort of a hybrid, but it alleviates a lot. It drives around. And I talked to one person who actually owns a Li, saying that for a daily commute, they just use electric because they don't drive more than 130 miles or 80 kilometers for their daily commute. And they just use electric, and they're able to use, the tap into that gasoline reserve when they make longer trips. Right. So when you're looking at Nita, which is the company that you guys have, it's a brand from Hosan, which you've never heard of. In January, they delivered roughly 2,100 vehicles. They've been growing every month since then. And in October, they delivered 8,000. And in November, they delivered 10,000 vehicles. And these are electric vehicles. They're up 372% from a year ago. 91% are sold to individual buyers, not to large companies or anything like that. And a lot of people never heard of them because there's so much going on in China that you don't hear about because, well, number one, you're not there. Number two, you're not paying attention to the media. You're only reading about what you hear in media here. And number three, you're not reading Chinese. You can't read Chinese. I can't read Chinese either, but I actually pay someone to translate Chinese articles for me. So that is that's one of the advantages that I have. And I pay people to sort of give me their opinion on markets there. That's why I've been saying that NIO is actually more popular outside of China than it is inside. It's popular enough in China, don't get me wrong, but it's more popular outside of China than it is inside of China. But Xpeng is the promise that I saw in Xpeng is really starting to show at this point in terms of their professionalism. Neo is going right now. They're hamstrung by the relationship they have with JAC Motors, and I see that going forward, they're probably going to try and free themselves of that situation. They have to start taking ownership of their manufacturing process. They can't rely on partnerships, and I'm talking about not just with JAC, but also with to a degree their dependence on CATL, which everyone's dependent on CATL. They're the largest battery producer on the planet right now. But yeah, so no, I'm very excited about her buying Xpeng. I hope that she has a long-term commitment to the company, and I hope that she shares the long-term vision that I do, not because like I have an emotional investment. I just hope that I am correct about my long-term estimation of their possibilities, and if she agreed with me, that would be reassuring to me. So yeah, yeah, okay, and let me see here. Boss Music says BVA started acquiring patents in 2014, 15, 16. I don't know about that. I can show accredited links. Oh, no, I'm sure that they do. It's not that I doubt you. It's what are the value of those patents, and that's something that's hard to quantify. Like, what is the value of a patent? How useful is it going to be? Because a lot of times you patent things and that technology is never commercialized. There we go here. Let me see here. Questions. So coming from a wealth management at a financial institution, I thought the same thing. Besides crypto, there's a whole new world be creating underneath your eyes, and it's all blockchain. Absolutely. So one of the big projects that I'm really interested in, and I'm thinking about joining their governance program, is Algorand. And they're building a world of finance parallel to traditional finance right now and going about it in a different way. They're really building a lot of programs in Latin America right now and in Oceania, in the Pacific Islands, and they're attacking this really in a way that kind of mirrors what Clay Christensen talks about in his book about disruptive innovation. It's called the Innovator's Dilemma, where he's taking a population that's underserved by the current financial world, which is people who earn money and make remittances, and Algorand's really sort of capitalizing on that right now too. Their blockchain technology, so very, very interested in the blockchain, but maybe not for the same reasons that you are. I'm disappointed by decentralized finance to this point because it's not anywhere near as decentralized as I'd like it to be, and yeah, so. Absolutely. I learned like it with MSC much more than Oracle SQL. However, Alteryx is amazing. And that's what we're talking about when it comes to Oracle and its potential for disruption, right? So SQL Server didn't really disrupt Oracle. They just became, our SQL servers became the backbone for later Microsoft technology that became a challenger for Oracle. But it's not just Alteryx. There are a ton of other folks out there that are amazing and that are set to disrupt Oracle, right? Oracle may survive through acquisition, or they, and I'm not talking about immediate death of Oracle. I'm saying that eventually their business is going to get cannibalized by younger and more nimble competitors unless they go on an acquisition spree. And yeah, so I'm very concerned with that too. So Oracle does have a lot of partners in the crypto space. Lots of other people have partners in the crypto space too. Alteryx is a company that I've really been taking a hard look at lately. I do like. I think I looked at they were down pretty far in price. They were looking pretty attractive to me as far as an entry point. So, yeah. Let's see, CRISPR is just one utility in the world of countless ends of blockchain technology. Yes. You guys are mentioning some like technology, Linux Foundation, Hyperledger, WFI, and Ethereum Enterprise Alliance. So, oh man, guys, you guys, I don't know if you're old enough to remember the beginnings of the Linux days and the community that first started developing on Linux. It was interesting to say the least. Yeah. So All right, guys, questions about current technologies, anything like that? I wanted to talk a little bit about the kind of the death of the oil industry today. I did a lot of that, or a little bit of that earlier. And yeah, okay, I'm going to answer one question here. Anthony Walker says, do you think the market will crash? Absolutely. One day it's going to crash. When is that going to happen? I don't know. But you know what I do during a crash? Mostly I don't do anything. Number one, I have the patience to wait until things come back. Number two, my convictions are fairly long term. I realize that macroeconomics is going to play a role in the individual in the value of any individual stock for a period of time, and it's not going to be necessarily reflected rationally by business metrics, right? So I'm just patient, and if the market crashes, I usually see it as a buying opportunity. But in terms of my current holdings, a market crash is generally not going to cause me to buy or it's not going to cause me to sell anything in order to reposition. Yeah. Hi, Jason. Hello from New York. Thank you for your insight. Can we talk about NEO's breakout today? I'm not sure that NEO can really own the breakout today. There was a breakout at Xpeng as well. I think that there were just a couple of things going on there in the market that sort of infected NEO and Xpeng, which is a lot of it had to be the fear of delisting. But if I'm looking here at news specific to NEO, especially in Chinese media, today there isn't a ton of it, other than the fact that Gasco Daily reports that NEO is going to unveil a second model on NEO Day. Not substantiated. I know that people have talked about the ET5. They keep saying that, but I think NEO Day is in just a couple of weeks. But the mysterious model is supposed to be called the ET5. That's all they have is that that's all they say in this. Basically, it's a headline saying that NEO will reportedly unveil its second sedan model on NEO Day next week. Great. One of the other things we know is that I think it was in November, there were 3 ET7s that were registered in Shanghai, which means that it's probably not released to the general public at this point, but the cars are on the road and driving, right? They're probably by test drivers, which like on the actual road and not on like test courses. So I think, and folks actually got insurance for these. Like that's how they track these as insurance registrations, not just license registrations. So 3 ET7s were insurance registered in Shanghai in November. Very encouraging. The one thing you haven't heard of is talk of their solid state battery. That has been completely dropped. So I am a little concerned about that they're not going to deliver on their 1,000 kilometer range ET7 anytime soon. If you remember NEO Day last year, that was one of the big things is they were supposed to have a solid state battery or a semi-solid state battery. And it was supposed to have an NEDC range of 600 kilometers, which would really mean a 400 mile range. When you NEDC really means like not even darn close, and you should discount that by anywhere from 25 to 30%. But yeah, and I definitely don't think NEO is the safest bet at all for a number of different reasons. Like the perception of NEO is pretty warped based on how it's been covered here in the US and the enthusiasm and the cult around it, right? There are a lot of companies that could end up being more successful, including companies that aren't traded on US markets, that are only public on domestic Chinese market exchanges. They could even be more successful than BYD. And like Hosan is one of these things, like we don't know much about it, and all of a sudden they're selling 10,000 vehicles a month, right? Whereas NEO just sold 10,000 vehicles last month. Yeah. And so NEO would just need to be connected to an American AI system. So Xpeng's driver assistance program is getting a lot of attention outside of the US. And their new, I think it's their GS9 that they announced is going to use their XPilot 4. Their XPilot 4 is supposed to be enormously capable compared to previous versions that they had. And I'm definitely not hearing the same enthusiasm for NEO's technology in that regard. I'm definitely not. But that may be a result of careful marketing on the part of Xpeng. So they're going after a really sort of tech savvy younger market. And it may be that their technology really isn't superior in that regard. They're just better at marketing it, which is, it's kind of like the Apple argument over, and this always loses me some fans. When I say the Apple argument over Android, Apple's technology is not superior to Android. They're just better at telling you that it is, right? I think that may be some of the case for Xpeng. Yeah. And Chris says, are you buying any? No, I'm not. No, I'm not. And this is the question that's coming up so frequently now that I think people are messing with me on that. I probably won't buy Alibaba for as long as Jack Ma is in charge. I think he has lost the mandate of heaven, so to speak. And if you don't know what I'm talking about, that's a phrase in it's transliterated from Chinese, like ancient Chinese emperors, whenever they had a rebellion and lost power, or their dynasty was kicked out by another dynasty, they were said to have lost the mandate of the heavens. I think Jack Ma has lost that, and he's out of political favor, and that the advantages that he once enjoyed in business may have come to an end, and Alibaba may not be as successful in the future. They may be hobbled to some degree politically. I will wait before I ever decide to invest in Alibaba. I would love to invest in Baidu right now. I think that Baidu has made some tremendous strides in terms of their AI investments. Tencent is a company I'd love to invest in. There's a couple of other companies that I'm thinking about as well. Thoughts on Vietnam funds as an investment? This is something that I was just looking at a couple of weeks ago. So I'm just in my infancy here in terms of investing and thinking about investing in Vietnam. But that's something that has come up in conversation over and over and over the last 15 years with some of the folks that I deal with professionally, is that there's always this this conversation about investing in Vietnam one of these days, and how they're an up and coming economy. So I'm a little bit of a wait and see kind of guy when it comes to Vietnam right now, and I do want to diversify in my. I still consider China not quite a mature market. I don't consider them emerging markets, but they're not quite a mature market. And Vietnam is still in that category of emerging markets. But yeah, I'm very interested in that. So that I don't know any specific funds. I haven't taken a look at any specific funds yet. Sean Hardman says, self-driving VTOL would be a surveillance threat too. I think for these foreign companies like EHang and NEO to be okayed by foreign government, it would need to be approved from a hardware standpoint, not a software standpoint. I think both would be a concern. So I think that all the cars, all the vehicles are going to have similar hardware in the future. I mean, one's not going to be that much different than the other, but it's whether or not the software end can be exploited in order to send that data to a third party and have actionable intelligence in it. That's my issue with it. And I think that we just haven't figured out exactly. There's going to be mistakes made. And somebody will eventually hack these vehicles and use them as intelligence gathering devices. It's going to happen. And when that happens, I'm hoping that there's just not a giant overreaction by either the US government or the Chinese government. And I do hope that they don't do something that impacts innovation, which that's my biggest worry, is that they do something heavy-handed that impacts innovation. And I'm not just worried about that happening in China. I'm worried about that happening in the US too. So have you looked at any Metaverse cryptos? So all of the Metaverse cryptos that I've looked at so far have really just been Ethereum tokens. And I talked to one of my distant relatives. I don't know very many of my own biological relatives, guys. I just met a couple of them through 23andMe and Ancestry. But I spent part of the summer with my cousin, my second cousin, twice removed, in Alabama, and we're a lot closer than that relationship would suggest. He and I are really good buddies, and I suggested to him that he buy some mana, and he actually never ended up doing it. But I didn't buy any either. It's one of those where I saw it as a giant speculation, and I still see a lot of those as a giant speculation. So I'm interested in these. I haven't made any investments in any of those. So I tried to buy some Sandbox the other day, and before I realized it wasn't actually available through Coinbase, and I didn't have I wasn't at my computer to use my other wallet to do that, because I haven't set up the Coinbase wallet to to go onto a decentralized exchange yet, but I'm looking into doing that too. But yes, I've looked at a bunch of metaverse cryptos right now. It would be speculation at this point and not necessarily an investment because we don't know which metaverses are actually ever going to attract real money, how those or which metaverses are actually going to be able to commercialize. So I think it's all speculation at this point. It would be a fun distraction. I wouldn't sink too much of my money into it because, like I said, the risk there is pretty large. Do you like Trupanion? Recent rise of the day to the collab with Chewy. So I don't know anything about Trupanion. In fact, someone just asked me about this the other day, or like not the other day, like yesterday, and I don't know anything about it to be all. Yeah, the Omniverse, NVIDIA's Omniverse is their metaverse project. So GC is out. He is meeting in 2 minutes. VOY.FYI. Let me see here. What are you talking about here? Let me see. I'm sorry, I still don't know what you're talking about in terms of VOY.FYI. And do you use a BRR strategy on your rental? I'm not sure what you mean by BRRR strategy. Yeah, BRRR, buy, rehab, refinance, and repeat. No. So in all of my rentals that I have, I lived in them at one point, and then moved out and moved up. So no, and the reason is I don't really like being a landlord that much. I'm lucky right now that the tenants that I have are great. That has not always been the case. I've had some really negative experiences with owning or with rental properties. So in the return on those has just started to be really, really good for me. I've actually had far greater success in the stock market than I have but owning rentals. But I do like rental properties in an inflationary environment. Every time that lease comes up for renewal, I get to raise rent, right? I mean, you get to do that anyway. You get to do that basically to the tune of 1 to 3% every time you renew for the most part in any market. And yeah, you can do that in any market. And you get to do that with even greater frequency, with greater intensity in an inflationary environment. If we see 6% inflation, I can guarantee you that I'm raising those rents by 6%. So Sean Hartman says, why do you think Zillow stopped buying homes? Mostly it's the fear that the cost of capital was going to rise, right? Meaning that the money that they needed to borrow to buy properties, that was going to become more expensive. And the money that people needed to buy properties from them was going to be more expensive as interest rates started to rise. I think you might see a lot of people's, so Redfin also has a house flipping strategy. Zillow has a house flipping strategy. I don't know that Trulia does. I haven't looked at their business, but there are a couple of other companies that do. You're going to see a slowdown with all of those companies doing that until they figure out how to manage the rise in interest rates. And I think that's one of the things that their AI models just weren't prepared to do at that point. I'm not saying that all businesses are going to do that, but I think you're going to see a little bit of an adjustment with all of these new AI lending or AI-driven lending companies. But Zillow was just the first one of those companies to stumble a little bit, and where they ended up buying a bunch of properties based on what the AI told them to do. The cost of capital started to rise in September. They were afraid it was going to rise a lot more quickly than it has, and so they stopped buying properties. Now they've ended up being able to sell those properties a little bit more quickly than they anticipated. They're probably going to look at starting to purchase properties again sometime early Q2 of next year. So yeah. So Tough W70 says, I'm trying to pull equity out of my personal residence to acquire a rental property. Any advice to where to get a cash out refi loan? So not necessarily, this isn't necessarily advice, but I'm doing a refinance through SoFi right now, and it is just dead simple compared to going to a traditional mortgage broker. I've been able to provide everything online and just upload it to their portal. It's in process right now. The only thing I have to pay for you don't pay any fees other than to do the appraisal. So there's other fees associated with it. So it's like $800. My town appraisals are really expensive. So it's like $800 to do the appraisal. I can use a third party that's probably $200 cheaper to do it, but I'm not going to bother doing that. But yeah. So SoFi is a good choice to do that, but a lot of other online lenders are going to be a lot easier. Most of your mortgage brokers are still so analog. I don't even like emailing people, all of my documents. I want to take my statements from my bank statements for the last 6 months. Fine, I got them all saved in a folder. Upload them. Proof of my financial assets, because that's where some of my income from. Fine, upload it to a folder. Proof that my HOA statements, all that, just scan in, upload it to a folder for them. It's been really, really easy. I'd never go back to a traditional bank again to get a loan. I don't like being asked 4 and 5 times for the same documents, which happened the last time I bought a house. The guy that had to provide my bank statements on 4 separate occasions. It's 4 separate occasions. It was unbelievable. And so yeah, I'm not doing that again. I can tell you, it's all going to be online. Yeah. So you see Sean Hardman. What do we see here? See, Patrick Dillon says, any company you're interested in and how you determine if it's a good deal or not. Okay, so how I determine if it's a good deal or not depends on what kind of company it is that I'm looking at. If I'm looking to get into a Coca-Cola, or I'm looking to get into a Dow Corning, or I'm looking to get into a 3M, then it's simply going to be based on their financials and whether or not I think it's overvalued or undervalued, right? Based on their PDE ratios and the PEG ratio, price earnings growth ratio, right? Or their dividend growth model. So that's actually one of the models that like Warren Buffett uses, is the dividend growth model, dividend growth ratio. That's one of the things I'll look at too in that case, which is less important now than it was 20 years ago when I first got into the business. All right. When it comes to a growth company, that is an entirely different question, especially when I'm looking at disruptive technologies. That is an entirely different question. If I looked at the books of any company that I've talked about in the last half an hour or so, they're horrible to look at, right? Because it's all losses. No one's profitable yet, right? Now you might see improving revenues. You might see actually increasing losses because they're using that money to expand. But Zillow is not profitable. Open Door is not profitable. Tesla wasn't profitable until 2020. All of those companies, when you're looking at them at future, so that is a little bit harder of a question. What I'm looking at in terms of these growth companies is the potential for disruption. Like, do they have something that can really change the way we're doing business right now? When I'm looking at so what we really need to see is like the marriage of a SoFi and an Open Door to really sort of change lending forever, to where the lending arm and bank charter and real estate portion can all be done in the same place, all under the same roof, and they can all benefit from those efficiencies, right? That's kind of what I'm looking at here in the future. And that's going to happen at some point, guys. They're not even going to have like a third party relationship with a lender that's preferred. It's all going to be done under the same house at some point, all sort of integrated. But when I'm looking at what I'm interested in first, what I'm looking at is total addressable market, potential for disruption, and whether or not they actually have the expertise to do it, right? And beyond that, and when I say whether or not they have the expertise to do it, there are all kinds of examples where companies had a superior technology, companies had the potential to disrupt. They didn't have the potential to execute on that because they didn't have the expertise in place. That's the hardest portion of that equation to evaluate. And that's one of the things that makes that evaluation for SoFi such a slam dunk for me, is the management that they have in place now. A couple of years ago, that before Anthony Noto was appointed the CEO, I don't think they could have scaled. I think that they I was not interested in the company until Anthony Noto became the CEO, the leader of that company, right? And that's that personality, the right people, the right processes, the right technologies. Those are all things that are very important for a company, and the right potential to disrupt. So that's how I evaluate them, look at them first. The actual evaluation for hard numbers, man, as much as I like to think that my process is scientific, some of it can't be scientific because you're always thinking about the possibilities of what could happen. How much of this market are they going to capture? How much does this technology appeal to the public beyond its actual utility? Plenty of things were useful that never caught on. See here. Chris P. Tacos 84 says, Happy Wednesday, Chris, and also thank you for joining my Patreon. Anvar 8 says, Anvar, I think you must be my most frequent contributor in terms of super stickers. I want to thank you very much. What are your thoughts on Twitter? It's been getting beaten for the last few months. How long would you go with it? That's actually a good question. So I have never been the biggest proponent of Twitter. Their ability to monetize Twitter, I've always thought has been kind of limited compared to other social media platforms. And hold on a second. Yeah, the ability to monetize, I thought has always been kind of limited. And I thought that their day in the sun would actually not be quite that long, meaning that I thought Twitter was only going to be able to innovate to a certain point and then it would decline in popularity. And that may have started at this point. I don't know. And it may be the reason that Jack Dorsey was so easy. I don't know how difficult it was to convince him to leave Twitter, but I do know that with Square going on, he's got more potential in Square at this point than he does Twitter. So my thoughts: I don't own any Twitter. I've never owned any Twitter. It's just not one of the social media stocks that I chose to buy. But I'm not saying it's a bad investment right now. But I think you should take a close look at it and see how much more is that market going to expand? How many more people are going to join who haven't already joined? And how many other avenues do they have for monetization, right? So I use Facebook advertising all the time for the various businesses that I have. And so I see the utility that Facebook has. Like dollar for dollar, Google advertising and Facebook advertising, dollar for dollar, beat anything that I've done in the last 30 years of advertising for different businesses, right? It's not even close. It's so specifically targeted that I can plan on, based on how much money I'm spending, these are how many clients I'm going to convert, depending on which business I have, right? It's not a one-to-one comparison for each business, but it's pretty good. And yeah. So here we go. Is NVIDIA too high now to enter at, or at least take a 25% in a year or so? Well, I don't think you should plan on taking 25% profit in a year on any stock. That would be unrealistic. Over time, there are very few stocks that average, greater than the greater return than the market as a whole. I think if you're planning on a stock averaging more than about 12% annually, you're bound to get disappointed, right? Now, if you understand that you're taking a risk that NVIDIA is not going to make 25% over the next year or so, then I think you if you understand that risk, then go ahead and take it. But I am buying NVIDIA. Like I said, it's another one of those companies that every chance I get, I'm buying NVIDIA, every single chance. And it's because I expect, for the additional risk that I'm taking, I expect that outside risk. I expect it is going to outperform the S&P 500. And so, yeah, I think it's going to. I'm doing that, but I'm not planning on it making 25% profit in a year. I'm not planning on that. I'm planning on 12%, which would be, if the S&P 500 averages 10%, 12%, 20% over that the return of the index. That to me is an acceptable amount of risk to take by overbalancing my account or having. Basically having more in NVIDIA than I would necessarily have by weighting it based on its capitalization inside of the index, which I definitely do, by the way. NEO Day is coming, and that's a huge catalyst. I see NEO running up and making new highs. So NEO Day was not a huge catalyst last year. The run up to NEO Day was very impressive, and after NEO Day was over, you saw the stock go up, and then it declined after that. It got up to like $65 a share, I think, last year in January or February. It declined and has never reached those highs again, right? I'm not saying it's not going to. I do think that the ET5, depending on its price point, could be a huge game changer a year from now when they actually start selling it. I think that could be a huge game changer. I really do, especially if they're committing to moving down into that lower market. I have mentioned before that they do have a branding issue, though, with all of the perks that they offer their Neo, their Neo owners. Those perks were based on these extremely high margin vehicles that they sold at a price point of $60,000 to $80,000, right? They're not going to offer those same perks to an ET5 owner if that price point is at $25,000. You're not going to get your free child care. You're not going to get your free conference rooms. You're not going to get your free coffee there and things like that. So would they have access to the Neo houses in that case? And if they don't have access to the Neo houses because they own a cheaper car, have you now created the class issue, right? Can they really afford, how far down the income ladder can they afford to go before they dilute their brand? That is my real question. And I think a lot of people haven't even considered that, Yep. Let me see here. What should someone do in advance if Neo delists? Look, so the question of delisting, a lot of people are saying, hey, you shouldn't scare people with this. They're going to get Hong Kong shares. You can buy shares on the Hong Kong exchange and you're pretty safe in that case. Hong Kong, as it existed before, no longer exists today as a result of China enforcing their security laws. Like, whatever we thought Hong Kong was 15 years ago, a separate system, one country, two systems, that is not the case today. It is something different. So the fact that China could force DD to delist here in the US, they could force Neo and Xpeng to beyond the fact that if Neo suddenly decides to comply with US securities laws and provide the financial information that our regulators want, the Chinese government could force them to delist here in the US too. Now you could buy, and now they've done a dual listing on the Hong Kong exchange. You could buy those shares in Hong Kong, but that's not a guarantee that you're protected from the capriciousness of that particular government, right? Definitely not. They don't have those protections that we would have assumed that they had back in let's say 2010 or something like that. So no, I think that you should possibly plan ahead as we get closer to that date where they could be delisted. You can protect yourselves with option collars, meaning you're buying puts on one end, you're selling call options on the other end to sort of lock in a price. You could simply in advance buy those Hong Kong shares, knowing that you're still at risk in those cases. You may have liquidity issues, and the stock would definitely take a hit. It would definitely take a hit in that case. So, how much would 100 shares of Xpeng be worth on January 1st, 2041? Enough for retirement? Probably. I think. Wait. How old am I? 24. Yeah, I think that probably 100 shares would be. That's 20 years from now. It would probably be worth enough for retirement. Meaning, in today's dollars, in 2041 dollars, maybe not so much. Meaning that it's not unreasonable that 100 shares today worth $4,800. It's not unreasonable that if the company survives, that by 2021 or 2041, that's worth say $1.6 million. $1.6 million. You could possibly retire on that. But there's a lot in that calculation that could turn out to not be true, right? You may have a lifestyle that won't allow you to live off of that little. It may not perform that well. Xpeng may not be around. It may be acquired or maybe something different by then. But there's a lot in that calculation. But yes, I think that it's a possibility. But I mean, I've said when I bought Tesla, there was no expectation that was going to make my retirement. But to be honest with you, it pretty much has. Like I could, if I took Tesla away and all the money I made off of Tesla, it would be a huge portion of my net worth just gone. So speaking of oil, I bought puts on Workhorse, but it keeps dropping. I thought Workhorse was involved in EV technologies, but they're not doing well. Do you have any insights into them? Just curious. So Workhorse had an issue because everyone expected them to get a piece of that government contract. And I was never on board with them getting a piece of that government contract. And here's why. I've been involved in the world of government contracting for some time. They don't have any experience bidding on contracts. They didn't have enough connections in that world for contracts. I was hoping they would get that contract, but I didn't have any expectations that they would. The weird thing is the people that got the contract, and I can't remember the name of the company off the top of my head, they have plenty of experience in government contracting and almost zero experience in delivering electric technologies. Whereas they bypassed a company that has the expertise to at least create and design an electric vehicle, but they just have no expertise in dealing with governments. And let's be honest, the other company at least has experience in manufacturing, and Workhorse didn't. So they are right now dependent on sort of the commitments they have to, I think Amazon, maybe one of the companies, they have a commitment to deliver some vehicles to Amazon and a couple of other companies. But right now, they don't actually have any customers, and that's kind of the issue with Workhorse. So you bought puts on Workhorse, and it keeps dropping. The Lucid CEO pulled out before the pullback. Any thoughts? What do you mean the Lucid CEO pullback? Like, how much did he sell, and what percentage of his actual earnings was that? Right? Was he pulling was it Trevor Milton was the guy's name, where he sold $30 million of stock at $7 to buy a ranch or something because he knew the company was a fraud? I don't think so. Lucid isn't a fraud. They just have a lot of challenges in front of them. And the point of going public is to cash out, folks. That is the point of going public. Is to get money from the public and to cash out to a grade. Use that money to expand operations or use that money to reward yourself. Yeah. So BYD has a new car called the Dolphin. So they announced that a couple of months ago, actually, and that car is actually specifically designed for a taxi fleet. And I think that the base price for their Dolphin, which somebody else named it the Dolphin, BYD didn't. Somebody else named it the Dolphin. The base price for that car, it has like a 210-mile range, and it's like a hatchback. It is a four-seater, but it's a hatchback. Base price for that is around $15,000. So the age of price parity, like if you bought an internal combustion engine vehicle in that same size, you probably have about the same amount of range, 210, 220 miles of range, and you'd probably spend about $5,000 more for that car. The age of price parity, we've already passed that. Just people in the West don't realize that. Well, people in America don't realize that yet. That we've already reached the point of price parity. We've already reached the point where electric vehicles have struck a fatal blow to the internal combustion auto industry. It really is. This is especially evident when I was looking at all of the coverage and the live streams associated with this World Petroleum conference, that they have totally capitulated at this point. We understand that the internal combustion engine is going away from the general public. It's still going to be around for specific uses, meaning I still think that if you haul around, 35,000 pounds of trailer all the time, you're still going to want, your Hemi, right? And you're still going to need that for certain reasons, or for certain applications. But I think for your day-to-day driving, I think that the internal combustion engine has already been struck a mortal blow, and it's on its way out. But the Dolphin, you're going to see this being used, the BYD Dolphin, you're going to see this being used by taxi fleets here pretty soon. And their orders for that were huge, like right off the bat. Thoughts on integrated batteries in the EV market right now? We're using cells, which are much heavier. Integrated batteries much lighter. What do you think that means for vehicle disposal? So beyond cells being much heavier, manufacturing is simply going to be cheaper to manufacture them. And I think it's not the weight savings that the reason that Elon Musk and his engineers wanted to do that. It's the fact that cell to vehicle manufacturing or pack to vehicle manufacturing is a lot more efficient than producing the cells and then producing the battery management system around the cells. Instead, you're producing the battery management system in like the frame of the car. So it's a bit more efficient to do that. What it means for vehicle disposal, that's a different story. because the original, this was my supposition, was that the vehicle, the battery packs that we had in vehicles were actually going to end up being reused in grid storage. So if you have like a lithium iron phosphate battery, you can use it for essentially 4,000 to 5,000 cycles before it's no good, but no good just for an electric vehicle, meaning it's dropped below about 70% of its original capacity. It still has a lot of life for the grid, for stationary storage. That was sort of my original. You go into Tesla, they take out your old battery, put in the new one. Now I don't really know how that's going to work, and that is I have to believe that they have put together a plan for vehicle disposal and to replace that battery. So that is just something I haven't taken a look at very closely. Jason, what do you think about upcoming Mobileye IPO versus Microvision and other autonomous driving companies? Microvision is not an autonomous driving company. Microvision is essentially a 25-year science project that has never shown profitability. They were a meme stock last year. I understand that, but I have zero confidence that Microvision is. I actually talked to. I did a video on them last year, and I was very careful about some of the things I said about their technology. And an actual physicist contacted me and said, "This is the issue with Microvision's technology. Some of the things that we're looking for them to do are not possible based on the physics of the situation, right?" And it's not that they're not making claims that can't be done in terms of their LiDAR. They're not making those claims. It's the public assuming that this is what their LiDAR was going to be capable of. But no, so I think they've got huge issues. I think Mobileye would be a far better investment in this case than Microvision for a couple of different reasons. But I'm not sold on Mobileye, though. That's definitely not like a recommendation to go around and buy them, but I'm certainly not sold on them at all. So Omniverse is Atari, which, by the way, its stocks cannot be bought because there's some regulation preventing it. Ticker PONGF. Oh, I thought Omniverse was NVIDIA's project. So I don't know what this VOG.FYI is. Shannon McLaughlin. I don't know if that's some sort of spamming that you're doing, but please stop. Thank you. I'm glad I loaded up on Xpeng in March deep. That's when Xpeng got crushed, I think, right? They hit like $73 a share and then they got crushed. But yeah, so you're probably up pretty big at this point. Yeah. All right. Should I sell my 100 shares of DD? Yeah, you probably should. They are going to be forced to delist. So unless they're willing to pull up, they're a rideshare application that's based in China. They can't pull up Shell recently. Royal Dutch Shell got pissed off by some of the regulations that the Dutch government was trying to impose on them. So they're pulling up stakes and moving the operations to a different country. DD can't do that, right? They simply can't do that. Their rideshare application is wholly dependent on them being in China at this point. They have to do whatever is dictated. They have to do whatever is dictated by the Chinese government. So yeah, I would probably sell your 100 shares of DD. This is not a company that I bought stock in to begin with. It's not one that I've really researched all that heavily either. We see here, if Kathy Wood and one of Biden's financial positions guy that manages BlackRock funds saying buy Xpeng and Neo, they're not being delisted. Yeah. So, like I said, I don't know if her goal is long-term or her goal is short-term in this case. I hope it is long-term, and I hope it validates my analysis of Xpeng. I am worried about delisting more than I was. I'm not supremely worried about it. I'm more worried about it than I was a month ago. I will say that He Jiapeng, the founder of Xpeng, is a lot more outspoken and maybe a little bit more controversial than William Li Bin is. So definitely the CEO of Neo is more polished and more popular than He Jiapeng is. He Jiapeng is a bit more egotistical and loud. That could get him in trouble. So that is definitely a concern. When I say personalities, like how annoying a CEO is not something that I would really consider here in the US. it's something that I would consider when investing in a Chinese company, because the nail that sticks up over there is the one that's going to get hammered down in a lot of cases. Jason, what are your thoughts on Square and their work on Bitcoin Lightning? And do you think they're a multi-bagger, long-term trillion-dollar unicorn? I don't know about a trillion-dollar unicorn, but I did buy some Square shares recently. I bought 100 shares of Square recently, based on based on the fact that they got crossed recently. I still see a lot of like long-term potential in them, and I thought it was a good entry point. I think I bought it like 179 share or something like that, and I think that fair value for Square is about $250, but I'm holding on well past what I consider fair value. I did an actual like workup on Square. I think that I'm holding on well past what I think is fair value. They're going to continue to grow. They're going to continue to diversify operations. So Jack Dorsey is very much committed to Bitcoin as a project. And I think if Bitcoin, I think Bitcoin has to evolve, or especially in terms of its transaction speed, in terms of utility, it's got to evolve, or other coins are going to start chipping away at its dominance. So I do think that Square is a multi-bagger in the long term, trillion-dollar unicorn. I don't know about that. So let me see here. I can assure you that Kathy Wood and BlackRock fund managers are not stupid. I follow smart money and not random YouTubers. Yeah, no, I understand what you're saying. I understand what you're saying about that, but following money is not always the and by YouTuber, and you say, and by YouTuber, I mean the idiots constantly talking about with delisting headlines. So delisting is a concern with me, but we've got 3 years to work something out, and I've always been hopeful that is going to happen. But let's also remember that BlackRock may not have a long-term strategy in mind. Kathy Wood may not have a long strategy in mind. Most of the time she does, like I said. But remember, she does do short-term trades. She does all kinds, they do all kinds of short-term trades around Tesla. Sometimes that's to capture gains. Sometimes that's because they have to reduce their overall holdings. They need to stay. I think they're supposed to stay under 11% or something total. So, but BlackRock, on the other hand, if you dug a little deeper into BlackRock, you might be a little bit less pleased about that evaluation. Yeah. So what do you think about Palantir? Are they too tied to government or Foundry? Or they have something Snowflake and others don't have? This is really unpopular, and I've said this a couple of times. I don't think that Palantir is really all that special. I think they built a cult of personality based on perceived work that they did years ago in the intelligence arena. We don't even know really that they were involved. We don't even know to what extent they were really involved in capturing bin Laden, and killing bin Laden, rather. I have a wildly different perspective on this based on a scientific paper that I read about some vaccination programs that went on in that area. And so I have a much different, and it's relevant because they took DNA samples while they were doing the vaccination program, and they were able to process those, and they were able to find relatives of bin Laden and determine that they were as close as second cousin, right? Which is, if you understand familial relationships in that area, that may be a lot closer than you think. And that's one of the ways that they were able to like narrow down his location, right? So I'm not sure to what extent Palantir was actually involved in that. However, when I look at how they operate, look at their revenue growth, SAIC, like Science Applied International Corporation, is a company that could be reasonably compared to them. And that's a company that's done reasonably well over the years, don't get me wrong, since they went public. But SAIC going public after being private for 30 years was really about cashing out. And that's kind of my worry with Palantir right now, is that they pretty much stated before they went public that one of the reasons they were going public was to reward people that had been there for a long time. And Palantir has a talent retention problem. They don't pay their employees enough, and they give them stock options. And the problem is that stock now has not moved in over a year. So they're losing talent right now to other players that, number one, have a higher base wage, and their stock is doing a lot better. So one of and that's kind of my issue, is that they're just a government contractor at this point. They have not made tremendous strides in private sector. They have a rising amount of competition. They have a lot of other players in the market that maybe don't do exactly what they do right now, but everyone else is catching on. They don't have any proprietary technologies. GC, man, I don't do personal insults on my channel, man. I try and keep it clear from that. So I don't agree with Anvar all the time either, but and I don't agree with you all the time either, but I don't do personal insults. All right, we're cool, man. We're cool. I'm gonna have another drink. All right. So, but in terms of Palantir, like, I actually own a couple of Leap contracts on Palantir. But there are real conservative Leap contracts, meaning that I think that this is a $40 stock in the next 2 years. I don't think this is a $100 stock in the next 2 years, like a lot of YouTubers think. And a lot of YouTubers that do an evaluation on this don't really have a very good reason to believe that this is a $100 stock. I'm looking at their revenue growth over time, and it's not incomparable to any other young government contractor that's out there, where they're going to see pretty good initial growth once they go public, and then that starts to slow down pretty rapidly. And my biggest issue with them, though, has been talent retention. They're not doing it right now. So little slime. That's sort of the long answer to that. I do own some Leaps. I think I own 2 or 3 Leap, maybe 3 Leaps contracts on that. So just 300 shares. Let me see here. Let me see here. Do you know if I can roll money for a 401k to Roth to finish off my cap for 2021, even if I'm still unemployed? So rolling money is not the right terminology. So you can do a Roth conversion in any amount, depending on your income level. So, but if you can't like roll money out of your 401k and then make a contribution to a Roth. That's not work. So Roth has to be made with earned income. But you can, if you are still employed, actually, hold on. It depends on. I misinterpreted that question because this is in my 3rd beer now. So first of all, does your company allow you to make in-service distributions? That is not an IRS rule. That's a plan rule. If the plan is written that allows you to make in-service distributions or in-service rollovers, what you would need to do first is, in a lot of cases, not in every case, but in a lot of cases, you would need to roll over the funds to an IRA first, and then convert it to a Roth. But you can still only contribute, which is different than rolling over. You can only contribute $6,000 a year to your Roth, and whatever the limit is, what is it, $24,000 a year now to your 401k? I forget what the limit is. But no, you can. That's the maximum you can contribute. Even if you roll funds out, you can't like contribute more, right? But when you do that roll over to an IRA, you can convert as much as you want. There's no cap on that at this point, all right? That may end it this year. There may not be any more Roth conversions. There may not be any Roth conversions after this year based on, and that, to me, that's very sad. I've been doing Roth conversions for years in small amounts, trying to keep my income pretty low, but trying to convert to Roth. If they don't allow that, that means I've got a giant tax bomb when I turn 72, or if I live that long. Well, my wife will definitely outlive me, but she'll have a giant tax bomb at 72. So required minimum distribution in a lot of cases can create a giant tax bomb later in age. You'll end up paying a lot more in taxes when you retire than you're actually saving by deferring those right now. So, yeah. Let me see here. So Doug B says, thank you very much, Jason, for the bomb. Another great show, and I appreciate your commentary. As always, Doug, thank you very much for participating. Laser, none of your business. Laser is in VDA. Okay. I don't know what you're talking about there. I'm going to take a look at that. Handyman says, great insights. Thank you so much. All right. And so I'm trying to scroll through here. Chris P. Tacos, $10 super chat. Thank you so much, Chris. I think I always appreciate these guys. This isn't the reason I do live streams, of course. I do this to interact with my subscribers. I think I said this on the last live stream, and it kind of surprised people. But I actually always lose subscribers due to live streams. But I do this as a service to the people who are subscribers and who are going to stick around. So thank you so much. I'm trying to go through some of these questions right now because I'm gonna get off here in a bit and eat. And can you spare a share of Square? That sounds like a Seinfeld episode. Actually, it does. Jason says, I borrowed $50K against my 401k to buy Bitcoin. Is that a good idea? Oh, man. So I knew people that borrowed money like that against their 401k in 2017, and then Bitcoin crashed. If you still had that money in Bitcoin, it would be a great investment. But as far as I know, none of the 3 or 4 people that I know who borrowed $50,000, $100,000, or not $100,000, but up to $50,000 against their 401k to buy Bitcoin, none of them held on long enough to benefit. They all panicked and sold. When I say panicked, remember you were underwater for like 2 years on Bitcoin. It got to 18,000, crashed down to 4, and then friggin' stayed there for like 2 years or something ridiculous like that, or a year and a half. Almost everyone lost their nerve and cashed out at that point. Is Bitcoin going to continue to rise? I think it is. I think you took an enormous gamble. Hopefully it pays off for you. I really hope that it pays off for you. I don't want to see people lose money. I don't I don't get a lot out of Schadenfreude. Like I don't get a lot of pleasure out of other people's pain. So I definitely want to see you succeed in doing that. It's not something that I would do. I tend to borrow money. I do borrow money to buy stocks. Like I buy stocks on margin all the time, but with a plan to pay that back with earnings, right? So maybe not the best idea to do that, especially with an asset that was that volatile, really. Anwar says Chinese are only after data storage tech to be limited for security and privacy. Will not be touching it. Yeah, that I agree with. They're after data storage tech for limited mostly for security. They don't care about privacy, their citizens' privacy. They care about security. Chris P. Taco says, not sure how Super Chat works. Chris, I think you just gave me $10. So if you want that back, I'll refund you. Here we go. And Chris P. Taco says, what kind of beer is that? So today I had the Big Wave Golden Ale and the St. Archer Hazy IPA. And the St. Archer Hazy IPA, I had a couple of those and pretty high in alcohol content. I don't recommend doing that if you're on a live stream. But BYA is going big in autos. The new Dolphin model is supposed to be the biggest EV seller ever. I actually think that's a possibility that it could be the biggest EV seller ever just because quality is fair. The quality of BYD vehicles is good, but not great, especially in comparison to like Neo's vehicles and Xpeng's vehicles. But good is good enough, right? Millions of people buy Fords, and let's be honest, those are just good. They're definitely not great. If you compare a Ford to a Toyota, Ford is good, Toyota is great. I think BYD in this case is kind of the same thing. There's a few issues with like fit and finish. A few issues with like durability of some of the materials that they use. And they don't have some of the same technology bells and whistles, but they seem to have hit on a market as far as delivering a quality enough vehicle to inexpensively. And I think that you could be right that this might be one of the best selling vehicles ever. And I don't know how much margin they have on that though. I think it's pretty interesting. Bob Johnson, thank you so much for the super sticker. Thank you so much. And Little Sam says, I'm in the process of doing a Roth conversion as well. I don't know that this is going to be the last year to do Roth conversions. I do know that Peter Thiel ruined it for all of us. Yes, he did. I've been doing Roth conversions for a long time. I love the idea of that tax-free reservoir of money once I hit retirement. Because most people aren't actually going to be in a lower tax bracket in retirement. They think they are, but they're not going to. It's largely because of how tax brackets are structured. There's a middle tax bracket there. Like if you have retirement savings at all, which most people don't, 50% of Americans have less than 80% of Americans have less than $10,000 saved up for retirement. So most people don't have retirement savings. So if you have retirement savings, there's essentially a 90% possibility that your earnings prior to retirement were between $70,000 a year and $150,000 a year. 90% chance. So 90% of the people who do save money for retirement are in that $70,000 a year to $100,000 a year tax bracket, right? Which traditionally was 25%. I think it's 22% now. The reality is you're probably not going to be in a different tax bracket once your 401k withdrawals, IRA withdrawals are factored in when you hit required minimum distribution age, plus your Social Security as like a married couple are factored in. You will not be in a different tax bracket. So deferring 25% of your or 22% of your income today means that you're paying that same amount, but on much more income later on in life. So for most people, the Roth IRA makes sense if you expect to experience longevity, right? To live a long time. It makes a ton of sense, especially if you expect to live long past the age of 72. Or if you have ambitions to leave funds to your kids, that Roth IRA is a great vehicle. Peter Thiel ruined it for us all now because he took his Roth IRA, made $20,000 in contributions to it, converted more money that he invested in, that he had from his 401k and qualified retirement programs, what was called what used to be called supplemental executive retirement programs that are now called something else. They used to be called SERPs or SARSEPs, but now they're something else. And he converted those to Roth. And so now he's got about $5 billion in assets that he'll be able to enjoy on a tax-free basis. So progressives got really upset, and they put something in the latest bill, bill that went through Congress, and that may get ruined for the rest of us just because one guy made $5 billion in his Roth. Personally, I think that should leave that open for all of us. It's not simply the ultra wealthy that are able to take advantage of this. It's anybody that can save for retirement can do that. So, GC says, Bob Johnson, lol, that was a wild move. It was, and I don't know when he took out that $50,000 to get Bitcoin. Like I said, I knew a couple of Bitcoin millionaires. None of the ones that borrowed money out of their 401k to be millionaires. Like the one guy that I know is a Bitcoin, didn't do anything special. He just invested a couple $100 a month, but he started doing it when Bitcoin was worth well under like $100 per coin, right? And he did it for years, and he's probably worth 8 to 12 million now. I don't know how much he spent on that, but he's long retired, right? He long retired, moved to Panama for a while, moved to Indonesia for a while, and now I think he lives in Thailand. I don't know, but this is a guy that I went to college with. He was a math major. He understood the precepts of Bitcoin long before anyone else did, and so he's a multimillionaire. But I don't that is a wild move, though, Bob Johnson, really wild. So, I diamond hand things for 10 years. If you diamond hand things for 10 years, man, I think it could turn out to be a really good bet, and I hope that it does pay off for you. Ellen Proctor says, I'm encouraged to know that I have more than 10% save or $10,000 saved for retirement, especially since I'm retired. So you are better off than 80% of Americans, and that is not an exaggeration. That is a statistic that has remained relatively constant for the last 50 years, is that a vast majority of Americans face some late in life financial emergencies, like in their late 50s and early 60s, and they end up being forced to retire before they want to, and they have very little in the way of retirement savings. Let me see here. Your average price is $45K on Bitcoin. Wow, then you must have borrowed that $50,000 out of your 401k pretty recently. You better have diamond hands on that and hold 10 to 15 years. And GC says, I'm thinking about putting some of the net worth into crypto. I would not do that. I don't even think I have more than 1 or 2% in my net worth in crypto. And the ones that I have the most confidence in this point in terms of growth aren't Bitcoin. I think that Bitcoin at best is going to 5x in the next decade. I think that other currencies, especially ones that have a lot of active development on their blockchain and their network, I think those have greater potential to be multi-baggers. So Your opinion on an ionic quantum computing pure play and Matterport's long-term investments? I'm already turned 100% on ionic. Man, so quantum computing is something that I have yet to be able to find someone. Here's the issue. It's a good thing that most blockchains are moving to proof of stake right now rather than like proof of work concepts, because the moment that quantum computing becomes sort of a reality, basically blockchains that are based on proof of work are pretty much done at that point, right? If you have access to quantum computer, you have an advantage that no one else does, and it's not immediately going to be available for everyone, right? It's just not. So Matterport is something that people keep bringing up over and over and over to me, and perhaps I just don't see how that is going to be the multi-bagger investment that most people think it's going to be. I do think it could be a silent investment here, but I'm struggling to see it at this point how modeling the real world in the virtual world is really going to be all that useful beyond a certain point. I think honestly that most of this is in relation to the metaverse. I do think there's plenty of commercial uses for modeling the real world in virtual space. I do think there's plenty of uses for that. But I do think in terms of the metaverse, that is not going to be one of the most useful things about that. So, but in terms of quantum computing, I'm enormously excited about quantum computing and what that's going to change. It is going to have a giant impact on, and as I said, it's a good thing everyone's moving to proof of stake. That's going to be a big deal. So G says, yeah, I may never buy ETH with these insane fees. The fees will come down, especially when Ethereum 2.0 comes out at some point. All right, guys, I am starting to get hungry. I've been on for like 2.5 hours now, which is longer than I thought I would be on. So I am going to say good night and end this broadcast. And hopefully you guys will be around next week. And I'm probably not going to come out with I have a bunch of family in town this week, and then family coming in from Japan next week. So, and they're going to be here for like a month. So I may not get too many more videos out before the end of the year, but I'm still going to do my live stream once a week. I look forward to seeing you guys, and I will see you next time. Thank you very much.